Good morning and welcome, ladies and gentlemen. My name is Meintjies, Head of Stockbroking for Nedbank Private Wealth. I'm delighted to have this opportunity to host this webinar today with my colleague, Justin van Wyk. Thank you for making the time to connect with us in this way online today. Some housekeeping before we start. Thank you for everyone who submitted their questions ahead of the webinar. It really does help us ensure we cover what is top of mind and relevant to this particular topic, and of course helps us prepare the slides that we will cover through this presentation. Please ensure that you use the Q&A chat box on the left-hand side to submit your questions during this webinar. We have a specific section at the end of the webinar where we will directly deal with the questions already posted and those coming through the webinar today. If your screen freezes up today, just use the F5 button and we'll take you back to where you last stopped watching this webinar. We will also be making this recording available soon after the webinar, so you'll be able to watch it again with friends and colleagues, and it will be available on the website and also emailed to you. So without any further ado, I'll hand over to our esteemed colleague, Justin van Wyk, to take us through this presentation. Morning, Justin.
Good morning, Grant. Thanks very much for that, Grant, and thank you to everybody for joining us. Good morning. I think it's quite an exciting time in announcing to Nedbank Private Wealth Stockbroking and online share trading clients a new solution which has taken a good sort of 2 years for us to put together, and it is the actively managed certificate as the invite suggested. So before we go ahead, I think I'll just run through the quick agenda, the introduction which Grant has just done. I will go through the actively managed certificate overview as well as the actively managed certificate in-depth sort of view. Then we'll look at the relevance of AMC, how it's managed from our side, fee structure, next steps, and questions and answers. Okay, so before we go into the technical details of what an AMC is, I'd like to sort of paint a picture. If we look at since the 2008 crash and even before that, South Africa's GDP has dropped from quite a significant amount 100 years ago to below 1% of global GDP. As a result of stagnant economic growth over the last 15 to 17 years, what we have also seen is capital has fled the country, and we've seen that in the host of delistings. I think if you go back almost 20 years when I started my career, we had close to 500 shares or companies listed on the stock exchange. As of the end of 2023, we had 240. End of 2024, that increased slightly to about 263 in 2023 and 270 odd in 2024. What this has meant is that for investors, the JSE is becoming a lot more concentrated than it has previously. For instance, the top 10 shares of the JSE are responsible for roughly north of 50% of the index's returns over any given year. We don't have to go too far back, about 8 years ago, when Naspers, the largest shareholding on the exchange, was in the region of 25% to 30% of the stock exchange's market cap. Now, why this is a problem is that it introduces significant risks to clients, and clients are not able to diversify away that risk significantly or meaningfully. And should Naspers or any other concentrated holding come off or decline significantly, it has dire consequences in terms of capital losses for that portfolio or the holder. In addition to that, what we have seen is a reduction in sectors. So the JSE has far fewer sectors than, let's say, the USA or even Europe. So we also have further increases in concentration on specific sectors, being financials, resources, and industrials within the JSE. In addition to this, we've had a problem which we needed to solve to be able to provide our clients a solution that is rand-denominated predominantly and listed on the stock exchange or housed locally, where we were able to provide a way for our clients to get exposure to a much broader universe. And as you can see with the chart on the right-hand side, Africa and South Africa is in essence less than 2% of global GDP, and South Africans in particular are invested largely in South African market, being concentrated directly in South Africa, where there's larger exposure and less risk by diversifying abroad. Again, diversification means increasing holdings, so you're not exposed to one specific share, sector, currency, or region, which the South African Stock Exchange unfortunately does have. Now, before we go on, after 2 years of searching and doing a lot of investigation, we're proud to announce that we launched the actively managed certificate, the Nedbank Private Wealth Global Portfolio, on the Johannesburg Stock Exchange. Yes, it's listed on the stock exchange where you can buy and sell it currently. We listed on the 2nd of September last year. After a successful book build, we raised 770 million from clients to participate in the actively managed certificate and our house view, which I'll go into a bit later. And we listed at a net asset value per share of 100 Rand a share. As of midday yesterday, after market volatility, we were at 105 Rand and 37 cents per share. And it shows that over the 6 months, we've added benefit. Now, to go as a higher level view in terms of what actively managed certificate is, it is simple. An actively managed certificate is an exchange-listed instrument that falls into a structured product category. But it's an exchange-listed, non-interest accruing debt instrument that provides the investor with a predetermined performance profile that is agreed between the issuer, and the issuer is usually a bank, and the portfolio manager, being us, being Nedbank. Now, when we say exchange-listed, non-interest accruing instrument, it is technically a debt instrument. So I'll go into our part later, which is UBS. UBS issued the AMC and listed it on the stock exchange for us. We provided the funding for it, and it's listed on the stock exchange. In exchange for the funding that we provide UBS, they do not pay us interest for that funding as with normal debt obligations. In essence, we choose a payoff profile which we manage on an intraday basis, but by supplying underlying constituents, shares, ETFs, and indices, and we manage that on an intraday basis, and we provide that to UBS in a more simplified format. If we were to give UBS 100 million Rand for the actively managed certificate, we can specify, as an example, for them to provide us the S&P 500's performance profile in return. So if we give them 100 million and the S&P 500 over a period of 10 years does, for example, 20%, UBS has an obligation to pay us 100 million back plus the 20% accrued due to the S&P 500's performance. If the S&P 500 falls by 20%, UBS will allow the debt to mature at 100 million plus or minus the 20%. So essentially, it is a substance debt, and as well, it has an equity type payoff profile. So what it is, it's a hybrid structure. It's a blend between a structured product and an actively managed fund or an ETF. It is essentially debt, but the payoff and the movement and the management of the constituents that this debt replicates is equity linked in this instance, or as any other fund is managed. Again, it is a debt obligation, and in this instance, it's a subordinate debt. However, the reason why, and I'll go to the credit ratings, etc., but later, this debt still has prior claim on the assets compared to equity holders. And what this means is that if, for whatever reason, UBS as the issuer goes insolvent, the debt holders, in terms of the AMC, will have prior claim to the assets compared to the people who've invested from an equity perspective into UBS. Okay? In addition to this, why it benefits us is it allows us to have a various host of underlying instruments, both locally, globally, and it allows us to manage it on an actively managed basis. The way we manage it is called a reference portfolio, and within that reference portfolio, our team, and I'll go into our team a bit later, specifies what goes into that portfolio on a daily, weekly, monthly, quarterly basis. The AMC, unlike other structured products that you've seen, it is also term structure. However, clients are able to come in and out as a normal share is on an intraday basis or on a daily basis. They're able to buy and sell, and they're able to hold the AMC for effectively 28 years. It is termed for 7 years, but the term is rolled over every 7 years, starting on year 7, 14, and 21. And again, it is listed on the stock exchange currently. Now, when we look at the AMC and how it works, I think there's some features that are quite pertinent and quite important to note. It is highly flexible, and it allows the manager, ourselves, being Nedbank Private Wealth, the ability to choose the underlying asset split between equities, etc., as well as the constituents, the shares, the region, the currency. In addition to this, it allows us to be able to scale effectively for our clients offering a pooled investment vehicle. At the same time, it allows a lower cost setup and running costs. One of the reasons why we went to it was that it was easy for us to set up, and the cost structure in running it was quite sustainable and quite low. And I've mentioned to this as well, it allows us to also do all of this in a customized way to tailor the investment, not just to broad market, but to specific client bases. In this instance, the private wealth client base, such as yourselves and the clients that we manage on a full discretion basis. And it gives it access to a high sort of touch, high net worth offering to the broader market should they wish. In this instance, we're offering this service or this offering and solution to the stockbroking clients and online share trading clients. But why invest in the book build? I think what's quite important, and I've alluded to this earlier, is that the AMC allows you yourself, the investor, the ability to, in past, not be able to access a high net worth strategy where it's tailored for high net worth clients and the requirements for high net worth clients. So it allows you to align your investment strategies with our investment process and philosophy. It also allows us as an investment house to start allowing our investment process to be aligned from a global and a local perspective, ensuring that our clients are well taken care of through our well-tested process. In addition to this, as you'll see a bit later, the Nedbank Private Wealth investment process is quite unique, and it's tailored, again, as I've mentioned, for the needs of high net worth clients, specifically within the private banking suite, private and wealth management suite. And then, in addition to this, what we like is to be able to provide institutional quality, so you get access to an institution and the quality that we provide with a personal touch. And lastly, by participating in the book build, you won't be paying the brokerage for the buy leg and going into the AMC, whereas if you were to buy it on the stock exchange on any other given day, you would pay the brokerage. So a slight added benefit and a slight uptick for being a Nedbank client. Okay. In terms of our strategic partners, we spent a good two years and a bit looking and scouring the market, and we finally decided to settle on a partnership with UBS. Now, some of the reasons why we chose UBS, and I think UBS is known for private banking across the world. They're one of the world's largest private bank, if not the largest, but they have the experience, they have the technology stack, and they have launched AMCs, and they were the pioneers of AMCs within the South African market. Since they entered the market about 8 years ago, they've launched over 40 of these actively managed certificates. And this means that they were able to sort of iron out any glitches or pain points, not just in terms of the launch, but they have the relationships with the various sort of investment houses, legislation houses, as well as stock exchange. They have the experience and the relationship there to get these types of solutions over the hurdle or over the finish line. UBS as well has a very, very great, world-class, well-known platform and trading desk, and allows us to be able to manage the portfolio at any point during the day, and be comforted that there's a trader. If we decide to put through trade balance at 11 o'clock at night, there will be a trader in Japan who'll be able to allow us to rebalance client portfolios. Some of the reasons why we might not have gone with other providers, I think I've alluded to it. UBS has probably the most experience in the South African market as well as globally. They know the private banking environment, coming out of Switzerland and being a global leader in private banking. And they have got the technical support from a technology stack, but also from a trading perspective. Again, we are able to manage the portfolio 24 hours a day effectively and be able to tap into the scale that UBS provides us with. In addition to this, I think was quite important, seeing that this is a debt instrument and this debt obligation, we looked at credit risk. And given where South Africa is and where the world is, I think this is a very important factor to take in consideration. Now, UBS has a Fitch rating of A+ on a long-term debt. That essentially has it on a lower default risk than the South African government, as well as Nedbank and any of the other banks within the market. And that's what we're wanting to do. We will continuously monitor UBS's credit worthiness because that is directly linked to the note. And if we see as an investment house that there's any default risk from a credit risk perspective, we will decide whether it is the partnership should continue or not. But given the outlook, credit rating for UBS is quite good, and you can see even compared to South Africa and our local banks, it's much higher. Okay. But Given the solution, we also have the entire capability behind it. And I think this is where we've earned our bread and butter. And from the next slide, hopefully you'll be able to see that our investment capabilities are quite extensive. Over the last year, the investment team, which I feel part of at Nedbank Private Wealth, has won the Euromoney Private Banking Awards of 2025, and this is a global award. We won Africa and South Africa's Best Discretionary Portfolio Manager and Best Investment Research. So we won 4 awards in the category. And last week, we managed to win our first SALTA, or South African Listed Tracker Award, for the AMC, which we are talking about, under the capital raising event. We had the largest capital raise, net flows of essentially 2 billion over the space of 6 months, and that's one of the largest net flows that the category has seen in recent years. In addition to this, and I'll go through this a bit later, we have a robust, proven investment track record, and you can see from the awards, it's testament to that. Our team, as well, has been managing offshore through the funds, as well as through local portfolios. We cover rand-denominated shares, and our fund, in particular, ranked in the top decile, 3 out of 101 funds on a 3-year basis to the end of March. Given the volatile times, I think that is a very good accomplishment. In addition to this, the collective experience in the team is in excess of 50 years, if not a lot longer. So we have a good blend of age and experience, as well as youth and exuberance. But more importantly, we have a team member who was one of the first people to launch an AMC with UBS and other providers in South Africa, which is why we're also providing this solution. Now, we've spoken about our capabilities. Let's have a look at a bit of our investment principles and how we do the investments. So first and foremost, as most investment managers, we are long-term investors. We are long-term, well-considered. So essentially, we don't invest for short-term. We will look at a company, invest over 3, 5+ years. As we find that the longer you hold a company or share or an investment, the risk of permanent capital loss reduces over time. So the chance of you losing or incurring a loss on your investment reduces the longer you hold it. And we overlay this with exhaustive and considered research approach, and I'll go through that a bit later. In addition, we believe strongly in diversification, not putting all our eggs in one basket, and we can see that in South Africa as well as offshore. We have the likes of Steinhoff and Enron in the 2000s, showing that diversification is quite important. We also run quite considerate capital protection, which is essentially we are a bottom-up manager, but we have a top-down capital protection overlay that allows us to manage the risk, specifically looking at asset allocations and the various asset classes. In addition to this, we believe that valuation is important, and the price you pay given the valuation is also important. So we believe in high-quality companies that offer what we deem, once we've put it through the investment process, extensive value in terms of return potentially, as opposed to companies that are not quality and have a short-term potential uptick in share price. And in summary, what you can see is the graph represents that. Our investment process is essentially a combination of investment returns, is a combination of a changing earnings, dividends, and sentiment or rating. So if you look at the graph, you'll see the bottom line is what we deem an average company. The top line is a higher quality company which we look to invest in. What we deem is that over time, high quality companies that have predictable, stable earnings as well as dividends tend to have a re-rating or positive market sentiments once we start seeing certain factors creeping into the earnings that boost the earnings. In addition to this, we look at the value. So if a company is quality and is priced correctly and undervalued, and over a period of time, the quality of the earnings pull through, what we deem the market then notices that it's a quality company, it's undervalued, and that the share price tends to rally or increase in price. That's just a quick overview of the investment process, but in terms of a bit more nitty-gritty perspective, it's pretty much overview of a 3-step process. We have a shallow dive, and that's where investment thesis is created by an investment analyst. And the analyst essentially provides an overview of the company and discusses it with the team to decide whether the company is worth providing a full-on investigation. After consultation, if the analyst agrees to go ahead with a deep dive, a full fundamental research process is undertaken. And there's about 30 odd, if not a lot more factors which are taken into consideration, which you can see in terms of that middle segment. Something like a moat is considered, and what a moat is, I'd like you to picture a castle. A castle usually has a moat around it, being a bed of water or a river that encompasses a castle. And we know that the wider that moat is, the deeper the moat is, the more likely the castle is able to defend the treasures and the people that it holds. Now, replace that with a company. The company is in place of the castle in this instance, and it has a wide moat. The wider the moat, the deeper the moat, the more the company is able to defend its profitability and its products and its client base against competitors. It also allows us to predict earnings going forward a lot more effectively. In addition to this, we also look at where the business is heading, and this is where we look at management. Is management consistent? Is the economics in which the company operates, is it reliable? Is it consistent? Will the company benefit from the economy growing? But more importantly, management as well. So management, are they aligned with the processes within the company, and are they sticking to the words and delivering value? Once we go through the deep dive, the company is then presented the portfolio management arm, and we have a 7-step checklist in which we debate and we unpack this deep dive. And some of the things that we'll look at is the currency exposures. Once we look at the company, is the currency exposure adequate? Sector, what sort of risks will it contribute to the portfolio, etc. Once we come to the decision as a collective body, we decide whether we will add, hold, or reduce that holding within the portfolio. Again, it's quite an extensive process, quite cumbersome, and it's not very easy for us to allow shares in the portfolio. Effectively, our mandate, or the way we manage investments, is that we will rather try to understand the company and invest in a company that we understand and we believe adds value than chasing returns in a company we do not understand. Now, to put this in perspective, I thought I'd just give a brief overview of one of the companies we added last year to the actively managed certificate, which was the Walt Disney Company. And I think a lot of you might know this, especially those with clients or with children. So Walt Disney changed its operating model in the last decade. Initially, what it was able to do was it created movies. We saw The Lion King. It then licensed the movies out to various media houses where they streamed it on their platforms. What Walt Disney realized was that they wanted to increase the reach, but they also wanted to increase and diversify their revenue streams, not just from releasing movies and the licensing. What they did was they said, okay, let's build our own streaming platforms, and let's start streaming our movies from the movie houses directly onto the streaming platforms, and we will allow people to subscribe to it. Not only did they stop there, they tiered their streaming platforms. So they had ad packages where they allowed streamers to allow adverts as a YouTube similar sort of structure, or they'd be able to pay on a subscription basis. So if the clients were not able to afford the massive or the large subscription fee on a monthly basis for Disney Plus, the ad revenue compensated for that. And why that was important was that helped bolster their revenues while they were sort of migrating the streaming services from other conglomerates and media houses and streaming platforms onto their own. In addition to this, what they realized is that they were able to take movies that they released in prior years and create additional storylines. We're seeing Mufasa being released now. We saw Frozen and a host of other sort of spin-off characters that they're able to then create sort of series and smaller movies via their streaming platform. In addition to that, they also created the merchandising arena. So they created an end-to-end system where the consumer would go to the movies, they would then engage after the movies and go buy the products at the merchandising offering. Disney would be able to then move the streaming or the movies onto the streaming platform and create alternative characters and alternative spin-offs, and that would then also further bolster the merchandising side of things. Now, we looked at in terms of our process, we were long-term well considered. We took consideration all of these factors, and the moment we started seeing that the streaming service became profitable and the average revenue per client started increasing, and we invested in the share and the company. And a few weeks later, the market, it was announced that they turned profitable, and the market rallied, and the share price rallied, and it's done quite well off the back of that. So again, it was a quality company was offering more predictable earnings and dividends, and as a result of that, we saw a re-rating through positive market sentiment, and the share price rallied. Now, to take it a bit more nitty-gritty, let's look at a bit of the portfolio design and pricing. Now, as a portfolio stands, we have in the region of 15 to 25 different holdings. Now, the holdings comprise of shares, indexes, and ETFs to allow us to provide broad exposure, and it is actively managed on a daily basis. And reason why it's actively managed, I think we all know over the last week or the last few weeks, the markets have been very volatile, and active management has allowed us to curtail a lot of that volatility with our investment process and philosophy. In terms of the fee of the actively managed certificate, or AMC, the internal fee structure is 0.75%, and that breaks down to 0.5% management fee and 0.25% admin fee. And you'll see a bit later that that's pretty much in line with market. The markets we are predominantly focusing on are the USA, Europe, Asia, and just broad general developed markets. That's to allow us to get access to our clients to other sectors, companies, and areas that they might not necessarily be exposed to. Already, South African investors are exposed to a large portion of the emerging market through the South African economy. We have launched it again, and the AMC is already trading on the JSE. Its launch date was on the 2nd of September, and we were there to blow the horn and open up the JSE. The current assets invested in the AMC is in the region of 875 million as of the close of yesterday. Now, on the right-hand side, you'll see a little bit of a summary of our research process, which I've gone through. But essentially, we screen for larger cap companies, $5 billion and above. We want resilient businesses with stable cash flows and profitability. And as a result, you will see the valuation come through. The benchmark is the MSCI All Country World Index. Now, when you look at the fee structure, what you can see from the slide is that at 0.75%, and you look at all the actively managed ETFs and even some of the passive ETFs currently in the market, it provides you, again, a high institutional quality touch with a private banking or private client or wealth management sort of personal touch. So from here, you can see that we're not that far off and quite ideally priced for an actively managed certificate with a high-end solution. And with that, I'd just like to open up the floor to any Q&As.
Yeah, thank you, Justin. Thank you for that comprehensive update on what the AMC is. And I think there's a few questions that popped through before the webinar, and I think we've answered some of them. But just to reiterate some of the questions that we haven't addressed yet, and I want to once again thank you for all the people that sent through the questions. So the first thing you mentioned, but we want to reiterate, as part of the book build, nobody will pay brokerage fees. So as part of the book build, we will accept your application, and we'll talk about that a little bit later on. And then we will allocate the transaction or the number or the investment amount that you wanted to allocate to the AMC to your portfolio on the 5th of May, which will then show in your portfolio on the 6th. One question that's popped through, is this investment a part of your 1 million rand offshore allowance?
Thanks, Grant. I think that's a great question. I think that's a burning question that most investors have. And I'm happy to say that it is not part of the 1 million allowance. It is a locally listed rand-denominated investment. So as would any other ETF, like an S&P 500 tracker trade on the JSE, there's 2 trades on the JSE, and this will fall part of your local portfolio. It just provides you with global rand hedge exposure.
Yeah, 100% correct, because it's rand denominated. So the question has also popped in, is this investment suitable for someone planning to retire in the next 3 years?
So I think this is a pertinent question in terms of, I think it's a wealth management portfolio as opposed to portfolio management question. It's something I would definitely discuss with a wealth manager. But essentially, we'd have to look at your investment horizon, or your risk tolerance levels. There's a whole host of different things that we need to take consideration for pure yes or no question. But it is suitable for investors with a higher risk tolerance and a higher long-term investment or longer-term horizon to invest in, I would say.
Yeah, 100% agree with you. I think the investment horizon at the time of investment needs to be discussed with your financial advisor. This is a long-term investment with 3 to 5 years initial horizon, and you might want to have a different kind of makeup in your portfolio when you retire. A question has popped up to say, can this portfolio be seeded? I think we will allow, if you have a carry facility, we will allow this product to be included in there because we have custody of the assets. One thing you did mention, but let's just deal with it again. As this is an actively managed fund, what are the rules in place regarding the asset types and market allocations?
Okay, so I think I went through quite a bit, I think, in terms of the process, but because we're an active manager house, we're long-term well considered, and every sort of holding is very, very well investigated and is presented to the team. We won't necessarily be taking large bets as maybe some other houses may do. Again, we believe in well-diversified quality holdings within the portfolio. So yes, it is equity linked and there is risk associated, but we won't necessarily be very concentrated in specific sectors. What we do is we find sectors that offer value as well as companies within those sectors.
I think one thing you mentioned in the presentation as well is who will be managing the assets inside the investment? I think just retouch on that.
Correct. So yes, so the assets will be managed by the team that I am part of. We're a team of 15 individuals and professionals, portfolio managers and researchers as the investment team, and we make the decisions on a daily basis. In fact, we meet on a monthly basis, but it's managed on a daily basis, essentially. And it falls part of our house view and our investment philosophy and process.
Yeah. Given the global backdrop, are there any portfolio constituents that you are considering as a defensive tilt?
Largely, what we find is that we were quite cash heavy going into March, and I think the portfolio has performed relatively well. And you can see that from a valuation point perspective, we saw that valuation was quite high last year, and we were quite defensive by being slightly overweight cash. And in the last few weeks, we've been slowly buying those cash. But typically, what you find are the typical defensive counters, telecoms, utilities are generally playing the part when it comes to defensiveness. And if you look at the way the S&P 500 has performed over the last sort of quarter, the tech shares have pulled back, and the rest of the market has kind of stepped up and taken over in terms of returns this year. So yes, we are very tech light.
Perfect. I think one of the burning questions, of course, is what is the minimum investment amount as we're dealing with a book build? I think, and based on the listing price of just over 100 odd rand, 105 rand you mentioned in the start of your presentation, we would suggest that you put a minimum investment in of 10,000 rand with no cap on the upside. As we've mentioned, there's 875 million rand already invested in this.
I may just add to that.
Actively managed certificate.
I think investors just have to be aware that this is traded on a daily basis, so that the price does change on a daily basis. So the price, as of close yesterday, was in the region of 105 rand. On the 5th of May, it could be different. So there's no defined price from this point.
Perfect. I think we have dealt the majority of the questions. I've seen one question in the chat, which we will deal with in the next section of the presentation. So I'm more than happy for us to move on to, so what's the next steps, right? You guys joined this presentation because you are all Nedbank Private Wealth stockbroking clients. So you're very familiar with our landing page to access. So you either have a green landing page or black if you're on the Nedbank Private Wealth section. But as Justin mentioned, this share already trades. If you go to the instrument watch list section and you type in the share code UNPWGP, this was a screenshot this morning before the market opened. As you can see, the open, high, low, close has 0 valuation. But if you go onto the portfolio right now or your website right now, you are able to view the actively managed certificate. You'll be able to see the buying and selling prices, which is managed through UBS, They are our market maker, and they make markets from 10 past 9 in the morning until 10 to 5 throughout the day. They will then, if you were willing to buy today because you think there's a massive, once again, a market drop because of the Trump tariffs, and you don't want to wait, and you think that the brokerage that you will pay to wait until the 5th of May, the upside actually outweighs that, you can more than welcome to go and buy that today or anytime up until the book build. We will use the closing price on the day of the 2nd of May, that Friday, for the book build, and then we will allocate the allocated amount to you on the 5th, and on the morning of the 6th, when you log on, you'll be able to see it. As you can see clearly from the screenshot, there is a buy and sell button, so you can trade it at any given time. How do you get access to this? We have got multiple offices throughout South Africa. So we have the online share trading direct contact center, or an office in Sandton, Cape Town, and Durban. All you do is give them a call on this number, indicate to them your account number and the value that you want to invest. They will then reply to you within 24 hours, indicating to you that they have accepted your offer or your application, and then we will go through the normal process. So if you elect tomorrow, just remember, nothing will happen until the 6th. If you wish to elect, the closing of this would be then 5 o'clock on the evening of the 5th, because people go home and want to have a weekend. So we can't take any applications after, let's call it 5 o'clock on the evening of the 2nd. One of the questions popped in today as well. So I think we've addressed everything related to the AMC. One of the questions that popped into the chat this morning was, we have competitors out there that don't only offer AMCs, but they offer equity-linked notes. And these are 1, 3 year, and 5 years into maturity. And do Nedbank have something similar? So I'm very happy to say, yes, we have something similar. Over the last 2 years, and this will be year number 3, we issued, the first one was a 1-year note that was linked to the top 40 and returned, was 100% capital guaranteed, returned above cash rates. We have one expiring now, I think in June or July. And if you search the code is NWF008, that is an MSCI linked note. Last year, we issued 2 other notes, was a 3-year MSCI note and an AI note. And these you can find, unfortunately, they've already traded. So, but the codes are NWF012 and NWF013. So we have an active program. The underwriter for all our products is the Corporate Investment Bank. So let's get back to the details on the slide. So this is what we will be listing in Q2 this year. So we've decided on a worst of index of the S&P 500, Eurostoxx 50, and the Nikkei 225. It is a auto-callable. What it actually just means is at every year, there is a date at which the performance is locked in. So in year 1, if the market goes up by 16% by the lock-in date, it secures it. You cannot lose the 16% in year 1. If year 2 does not perform, you already locked in the 16%. If year 1 does not perform, but year 2 has performed by 32%, it locks in the first year's 16 and the second year's 16. And at maturity, you have a possibility to get paid out 48% above the initial investment amount. The pricing of this will be communicated later in most probably May this year, so you can have a look at that. In addition to that, we wanted to list a local note as well. So we've thought around a property basket, not an equally weighted property basket. As you can see on the slide, it tells you what the basket constituents are. It is 100% capital guaranteed. If the basket, the combined basket, is 1% positive after year 3, you are guaranteed to get 30% at maturity. If the basket is between the ranges of 30 and 50% above, you are then capped at 50%. So minimum investment 3 years to make it tax efficient. If the basket is positive 1%, you'll get 30%. If it is between 30 and 50%, you'll get a maximum of the 50% at maturity. So yes, we have an active notes program. Look out for our marketing documentation in the month of May. We can see if we can have another webinar to get the subject matter experts to speak to you about some of the technical nature of these notes. But yes, happy to say that we have it and looking forward to see how many of you want to invest in this. They are all rand-denominated, so they will be listed on the JSE. You also do not use for the MSCI or S&P 500. You do not use your foreign allowance, so it's rand-denominated, rand-priced, and it doesn't affect your foreign allowance. So nice little whetter of the appetite for something else that we're doing later this year. Thanks very much. I don't see any other questions. I will just refresh the question block. All right, let's just see. There's some questions in now. So someone has asked us, can you please recap the time frame of the investment? And is there flexibility if you need the money? Nice question.
Just confirm, Grant, it's the AMC, correct?
Yes.
Yeah. So there's, unlike sort of the traditional structured product environment, you're not locked in. There's no lock-in period. It trades as a normal sort of, I wouldn't say it's not an ETF, but it would trade like an ETF or like a normal share. So if you buy today, you can sell tomorrow. You could buy at 10 o'clock in the morning and sell at 4 p.m. in the afternoon. It trades as a normal share. And effectively, it'll be around, the AMC will be in existence for 28 years, should we roll it over after year 7. And year 7, 14, and 21.
The second part of that question is around access to money. As Justin mentioned, and I mentioned a little while ago, this AMC is priced daily and liquidity provided by UBS. So if your situation changes and you need access to your investment, you can just go into the portfolio or call any of our branches and give us an order to sell the quantum that you need to liquidate, and we will be able to sell it in the market, and the settlement is T+3. The one question was, does the investment team have any success references to share with us? I think, Justin, you mentioned it right in the beginning of your presentation, the awards that you've just won. If you just want to maybe re-emphasize that.
Yeah. So last year, well, the last few years, we've been performing quite well. Effectively won the best portfolio management or discretionary portfolio management house in Africa, as well as research house. Our equity fund was ranked 3 out of 103, performed quite well. And the AMC, although we're not through the first year of performance, the NAV, and Grant, you showed a bit of that. At the open, it was about 108 Rand, where we listed at 100 Rand. And when you pair that up against its benchmark, it's performing quite well. But we will be releasing performance from year 1, and that's just according to industry standards. But effectively, we've performed exceptionally well over the last sort of 5 to 7 years.
Yeah, I think you captured that well. I think the norm is to issue a fund fact sheet or a minimum disclosure document. And because we haven't gone through the first year, we haven't issued that yet, but it will be issued at the end of that term. One other question, yes, this recording, we are recording this webinar and we will send it to you in the form of an email. The other question around liquidity, as mentioned, the liquidity is managed by UBS. What I have seen on the market is generally a bid for 1,000 shares and an offer for 1,000 shares. If that is full, they will refresh that bid and offer, so it's not limited to 1,000 shares per day. So as this product was previously designed for the discretionary book, and we haven't gone to market with a big marketing campaign, the liquidity is only there to get pricing at the moment, but you are able to buy it and sell it at any given time. So there's a question around tax. Although we're not tax experts, the norm is if you keep an asset for more than 3 years, you can then claim capital gains. If you trade it intra the 3 years, you will be subject to higher tax rates as per the norm. There's a question around, can I lose capital or is it capital guaranteed?
It's not capital guaranteed. So it's equity market linked, or it's market linked, as any other ETF that would track an equity market or investment portfolio. So there's no capital protection on the AMC.
There's another question around the equity-linked notes. So around the tax treatment. So once again, we're not tax experts. We structure these notes to be longer than 3 years to meet the minimum holding period, which will then allow investors to claim a lower tax on the investment. So that effective rate is based on your own tax situation, but it is not income tax because you've held it for longer than 3 years. We've also priced in the ability to roll it for an additional 3 years. So we've done that for you as well. So then it will be a 6-year investment, which can assist with your discussion with your tax consultant. I just want to do one last refresh to see if there's any additional questions that's popped in. I don't see any. Just refresh again. Question of how is the AMC price determined and who determines that? Good question.
So UBS determines the price, and they strike the price intraday. They've got the pricing mechanism, which is a system that will price underlying constituents throughout the day. South African market trades slightly different to offshore markets. They can, the dark pool, the different ways they can get their asset valued using international markets. But the moment the American market opens as well, they will have a lot more clarity in terms of what the underlying constituents do and perform, and they will price it almost 100% according to where the assets move. If the AMC doesn't trade at all during the day, according to the JSE, they have to strike an NAV price. At the end of the day, a price will be published so that you can mark to market or you can value your portfolio, as with any other ETF or any other listed structured product.
Yeah, thanks, Justin. And once again, there's a question around what are the minimums. So we've indicated that the minimum investment we believe should be 10,000 Rand with no maximum. And there are no 10,000 intervals. If you have a minimum of 10,000 or you want to do 11 or 12 or 13, as long as it's above the 10,000 Rand minimum, we will accept your applications. As there are no additional questions, I want to thank Justin for taking the time to present this unique product to us, and everybody who's joined us on this webinar. Once again, thank you to you all for taking the time to listen to this. We look forward to taking your calls in the branches. If you need any information, they are all up to speed on the product as well, and then take your applications to participate in this product as a nice diversification of your portfolio without externalizing rands. Thank you very much, and you will receive a copy of this recording in due course. Thank you very much, everybody. Enjoy the rest of your day.